Welcome to This Explainer. Today, we're diving into exactly why mastering your mind and not just endlessly tweaking your strategy is the ultimate key to consistent trading success. Look, if you've ever watched a flawless setup play out while you just sat there totally paralyzed, or watched your execution completely fall apart even when your strategy was rock solid, well, you're in the right place. Let's get into it.
So let's kick things off with a pretty staggering number, 95%. 95% of traders fail. And here's the kicker. It's not because they have a bad strategy. It's because their own subconscious programming is actively working against them. You know, we like to think we're making these highly conscious, rational choices when we trade, right? But the truth is, most of our behavior is just running on autopilot. It's built from old habits and deeply ingrained biological reactions.
Okay, here's our roadmap for fixing this today. First, the flawed trading paradigm. Second, the cycle of self-sabotage. Third, overcoming fear and doubt. Fourth, fixing greed and FOMO. Fifth, defeating hope and revenge. And finally, building your emotional seawall. Let's jump in.
Number 1, the flawed trading paradigm, and why your strategy really isn't the problem here.
It all comes down to a simple chain reaction. Think of your paradigm as the lens you view the market through. That lens totally shapes your thoughts. Say you inherently believe the market is cheap right now. Well, that thought drives your decision to buy. That decision forces your action to physically click the mouse, and ultimately, that dictates your result. If you get stopped out and lose money, the root cause wasn't the market at all. It was that initial paradigm making you see the market as cheap in the first place.
The psychologist Carl Jung really hit the nail on the head when he said, "Until you make the unconscious conscious, you will direct your life and you will call it fate." It's so true, right? If your nervous system is hardwired for stress and survival, your brain is just going to keep recreating the exact same mistakes over and over. Throwing a new trading setup or a fancy new indicator at the problem, it just won't work until you change that underlying internal programming. Otherwise, you're just going to keep calling those losses bad luck.
Moving on to part 2, the cycle of self-sabotage. Basically, your hunter-gatherer brain trying to survive in modern markets. See, every single destructive emotion you feel loops through this exact same mechanical cycle. It starts with a perceived threat. This triggers the brain, which instinctively jumps in to shield you from pain, like the pain of looking stupid or losing money. That avoidance leads directly to a hasty, self-sabotaging behavior, which, big surprise, results in a negative outcome. We're going to take this exact mechanical chain and apply it to the most dangerous emotions you face in the markets.
Which brings us to part 3, overcoming fear and doubt, or getting paralyzed right at the buy button.
So, fear. Fear is literally false evidence appearing real. Think about it. Thousands of years ago, if you misread a threat, like a saber-toothed tiger rustling in the bushes, you didn't get a second chance. You were dinner. Fast forward to today, and your brain is associating being wrong in the market with that same ancient physical danger. It literally causes you to completely freeze up at your mouse when a perfectly good setup appears. Crazy, right?
And when you break it down, both fear and doubt are just your biology attempting to avoid the pain of being wrong. But look at what actually happens. The behavior? You skip the trade entirely, or you freeze up and exit a perfectly good winning trade way too early. It's totally ironic. By playing it safe, you're virtually guaranteeing the absolute worst outcome. You miss out on the setups, and worse, you prevent yourself from gathering the crucial data needed to prove your system actually works.
Now, to cure this, you absolutely cannot just rely on positive thinking. You need cold, hard mechanical fixes. You have to establish binary if-then rules pre-market. This removes you from the actual decision-making process in the heat of the moment. For example, if price breaks yesterday's high, then I enter. It's a simple yes or no. And once you click that button, you have to detach from the outcome. You crush that doubt by building genuine competence through repetition, meticulous journaling, and serious backtesting.
All right, part 4, fixing greed and FOMO, that overwhelming urge to just squeeze out a little bit more.
We all know FOMO, right? The fear of missing out. It stems purely from a scarcity mindset. It's this absolute panic of being left behind. But we need to shift that to an abundance mindset. Think of the market like a bus station. Seriously, the opportunities, they never actually run out. They just rotate. If you miss one bus, no big deal. You just sit down and wait for the next one.
When we map greed and FOMO onto our cycle, we can see exactly how they trick you into avoiding the pain of missing out. Let's say you feel completely invincible after a hot winning streak. Your behavior totally shifts. Suddenly, you're oversizing your positions or entering a trade way too late just trying to chase the momentum. And the outcome? You get trapped at a terrible price and you end up donating all those hard-earned profits right back to the market. We've all been there.
So what's the antidote here? It's setting a non-negotiable daily ceiling before the volatility even starts. Maybe that's a maximum of 2 hours of screen time, a hard 3-trade limit, or a specific profit percentage. Whatever it is, once you hit that ceiling, you shut the laptop immediately. Done. This isn't a sign of weakness, guys. It is a professional act of discipline. And always remember, if you weren't fully prepared for a trade, it was never yours to begin with.
Okay, part 5, defeating hope and revenge, the ultimate account destroyers.
There's a quote that really hits hard on this one. Every single time you choose your ego over making money, you are funding a war against yourself. Let that sink in. Holding on to a painfully losing position or aggressively revenge trading right after taking a hit, that's just you absolutely refusing to let your ego get bruised. In this game, you can choose to protect your ego or you can choose to make money, but you definitely cannot have both.
Just look at how this plays out in real time. Whether you're moving your stop loss way wider, just operating on blind hope, or frantically firing off market orders for revenge, you are simply avoiding the pain of admitting defeat. Newsflash, the market doesn't know you. It does not care about you. Yet this desperate avoidance behavior takes what should be a standard, boring 1% loss and turns it into a completely blown account.
So what's our mechanical fix for this mess? You implement the 10-minute rule. After any loss, no matter what, you step away from the screen for at least 10 solid minutes. By forcing this mechanical pause, you're letting that spike of adrenaline fade, so your logical brain can actually get back in the driver's seat. Combine that with a no-trade rule, which means absolutely never entering on the very next candle, and you start reframing those losses. They aren't personal attacks. They're just standard business expenses, like paying rent or buying fuel.
And that leads us perfectly into part 6, building your emotional seawall, constructing your mechanical defense.
The mindset shift we need here is absolutely crucial. Listen, the goal isn't to become some numb, emotionless trading robot. That's impossible. As long as you have a pulse, you are going to feel fear and you're going to feel greed. You can't stop the waves from hitting the shore, but you can build a seawall, a solid seawall of mechanical rules to protect your execution from getting totally hijacked by those emotions. To finally close that execution gap, you just need to follow these 3 simple steps. First, physically write down the specific emotions you struggle with the most. Second, when you feel them bubbling up, take a breath, introspect, and ask yourself, what pain am I actually avoiding right now? And third, apply your mechanical rule. Whether it's that 10-minute timeout or a hard daily ceiling, just apply it. By doing this, you are literally physically rewiring your brain rep by rep, replacing sheer panic with systemic awareness.
So the next time you face a really frustrating loss, I want you to ask yourself this one question. Are you truly trading the market, or are you just trading your own mental well-being? Keep in mind, true conviction comes from confidence. Confidence comes from competence. And competence? That only comes from a consistent system. True profitability always comes from mastering the mind. Thanks so much for joining me on this explainer today. Now go build that emotional seawall.